welcome to Moneylife News and Views. I'm Debashis Basu. From the peaks made between late September and early December, various market indices have fallen quite sharply. The Nifty 50 index is down by about 13%, Nifty 500 and Nifty midcap by 16%, while Nifty small cap and microcap have fallen by about 20%. It is the fall of the last two indices, which is small cap and micro cap, that is causing a lot of distress. The reason is this. Over the past 3 years, the character of the Indian market has changed dramatically. Nifty or even Nifty 500 do not represent the market that we have just experienced. Since 2021, small and mid-cap and micro-cap stocks have skyrocketed and form the core of the market today, as retail investors and many mutual funds filed into this segment of the market. These days, most IPOs are from microcap companies, not even small caps, just about 1,500, 2,000, 3,000 crore market caps. The latest definition of a small cap is one with a minimum market capitalization of around 10,000 crores. So a mid cap is one with which now has about, the smallest of them has about market capitalization of around 28,000 crores, and the largest one is about 100,000 crores. Now, this is very, very large. These were large caps and mega caps earlier. Together, small caps and mid caps form the core of this market, as I said, and the outlook for this segment is not very good. The leading indices actually hide the bloodbath that many of the high-flying stocks in these 3-4 segments, that is microcap, small cap, and mid cap, have been suffering. Many of them have fallen by 30 to 40%. The fall has been indiscriminate, irrespective of whether the latest results have been good or not. The market mood is something like this. If the results are bad, you just sell. If the results are good, well, you sell again. You sell also because valuation is too high. This syndrome, this is the market sentiment, or whatever you call it, this has affected dozens of sectors and subsectors. Now, where do we go from here? If it was a correction, then it would be one thing. And then, of course, the question would be, is the correction over and the bull market resume its journey? Well, I'm not sure if this was just a correction and whether it is over or not. But one thing I'm fairly certain about, which is the bull market of the kind that we would have witnessed in the past few years is not about to return anytime soon. That is over. That bull market is dead for now. Bull markets rise on the basis of several medium-term triggers, some local, some global. The 21-24 bull market had multiple triggers. A strong global and local economic rebound from COVID-induced recession in 2021, followed by huge capital expenditure by the government across multiple sectors, railways, defense, transportation, renewable energy, civil works, water, sanitation, etc. This sparked a stock market boom, attracting millions of new investors and social media influencers, pushing stock prices higher, especially small caps, and creating a self-reinforcing cycle. The more the stock prices went up, the more demat accounts were opened and more people were buying stocks. But now the post-COVID economic recovery is pretty much over and growth is slowing down. As a result, government income is taking a hit, leaving less room for capex. The budget still has a massive allocation of 11 lakh crore, but project sanctions are slowing down and so are government payments. For the first 5 months of 24-25, the excuse for slow sanctions was elections and the model code of conduct, but that excuse is wearing thin now. In short, the boom of the kind we have seen is over, and now we have to deal with a hangover. Self-correcting, it's like a self-correcting normalization cycle that is kicked in. Worse, to add to this, Donald Trump has reoccupied the White House and has lost no time in hurling a cocktail of confusion, challenges, and kind of craziness in policymaking that is hard to understand, much less to calculate their impact. So far, every decision of the Trump administration has been bad for India. The latest is demanding and getting duty cuts for the import of Tesla cars, The government wants Tesla to set up a local factory as part of the deal, but Trump thinks even that is quite unfair. Fortunately for us, even with 0% duty, many US products are uncompetitive or will attract insignificant sales. But meanwhile, India's policymaking on trade and industry will certainly be subject to brutal and tempestuous Trump policies. In short, Indian economy and markets now face multiple headwinds, and Indian policymakers have no capacity or leverage to deal with it. Companies will bear the brunt of the storm. Those with high valuations will crash. Of course, this doesn't mean that the markets will keep going down and there will be no sharp rallies. Stocks don't go down in a line. And there are always strong counter trend rallies, as they're called, even in a bear market. But it is hard to see those rallies sustaining over time and leading to a fresh bull market very soon. There are simply no bullish triggers immediately. India's growth is likely to hover around 5 to 6% as in the past. For reasons I've explained several times recently. We are not making the right policies. We are not implementing the right policies. And it's like we are doing more of the same that we have done in the past, and we will get the same kind of results. Economic policies remain more or less the same. The climate militates against enterprise. Consumption remains low among the masses because of poor income growth and high inflation. And of course, they remain high among the rich because we have a K-shaped economy. This is not a recipe for innovation and productivity-led growth, which alone can lead to sustained wealth creation. High government capex in the last 2 years was an exception and could be the only bright spot if it continues. But as against this, India will be under intense pressure during the 4 years of Trump to buy arms and oil and cut tariffs and open our markets to his satisfaction. India has no answers to savage, one-track, self-serving policies of the US government unleashed under the new regime. To top it all, it is not even clear whether Trump can make America great again. US economic growth may actually slow down in the second half of 2025 if tit-for-tat tariffs, tighter immigration, and cutting down government waste and inefficiency led by Elon Musk actually start hurting the economy, as some people think it would. If that happens, it will hurt India too, because the US is our largest export market. So overall, India has a very weak capacity to withstand all of these negative trends which are happening to come all together at the same time. So this is not exactly the best time for small caps to shine as they've done in the past. That, of course, this is not an investment recommendation, nor does it mean that some stocks will not do well or the markets will not go up from time to time, but all those are separate issues. Limited point I'm making that if you are trying to look back at the last 3 years and think that's going to come back, that would probably won't happen. If you like this, please do subscribe and do share this video. Thanks for watching.